Hello everyone and welcome to the second episode of the Candlestick Course for beginners. My name is Mr. Crypto Tracker and I'm going to teach you how to trade with candlesticks. Before we start this episode, please make sure to subscribe to the channel if you didn't do it so far, and also turn the notification bell on. In this episode, I'm going to talk about the candlestick construction. These sections will provide what you need to build your foundation of candle charts. I will address the actual construction of the candle lines, and also I will delve into basic candle applications and begin to harness the power of candle charts. In this episode, you will learn how to identify the components of individual candle lines, how to discern the difference between real bodies and shadows, and how to construct a candle line. Technical analysts use three basic kinds of charts: line charts, this is a line chart; bar charts, this is an example of a bar chart; and also candle chart. This is a candle chart, which is the focus of this course. Okay, let's talk about a single candle bar. This is a single candle bar you can see here. It consists of two different parts. This rectangle here, we call it real body, and these two lines, we call it shadows or wick. The real body represents the range between the opening and closing price. For example, here in this green one, let me activate the laser. Yeah, here in this green candle, here is the price opens and here price closes. A green real body tells us that the close is higher than the open, since the top of the green real body is the session's close and the bottom of the green real body is that session's open. As for the red candles, a red real body shows that the close was lower than the open. This is the close and this is the open. The bottom of the red real body is the session's close and the top of the red real body is the session's open. The session can be any time frames from a minute to a month. Let's talk about the shadows or the wicks. The vertical lines that extend above and below the real body are called the upper and lower shadows or wick. The top of the upper shadow is the session's high. Here is the session's high. Here is the session's high. The bottom of the lower shadow is the session low. The candlestick line uses the same data as a bar chart use, but the color of the candlestick's real body and the length of the candle line's real body and shadows convey a snapshot of who is winning the battle between the bulls and the bears. For instance, when the real body is red, like this one, that means the stock closed below its opening price. This gives you an instant picture of a positive or negative close. Those of us who stare at charts for hours at a time find that candlesticks are not only easy on the eyes, they also convey strong visual signals sometimes missed on the bar chart. One of the most important benefits of using candles is that they give instant picture of how traders and investors feel about a certain stock or market. A long, protracted real body translates into very strong opinion. It can be either bullish or bearish. Conversely, short real bodies means that stock participants have no strong opinion. The bulls or the buyers hold the price up while the bears or the sellers press it down. Look at this strong real body here in this chart. This green real body showing the closing price multiple points above the opening price. This is the opening price here, and here is the closing price. This indicates extremely positive or bullish sentiment. But look at this red real body here. This long red real body with the closing price several points below the open reveals negative or bearish sentiment. So now you know all about candles, what a candle consists of, and what information you can extract from a candle chart. In the next episode, we will discuss one of the most critical uses of candle charts, giving you early indications that the trend may be changing. Whether a major extended trend or a shorter intermediate term trend is in place, candle lines and patterns display powerful clues that a shift in control from bulls to bears or vice versa is in process or could be imminent. For a trader, this information is crucial. For an investor, recognizing these all-important signals could make the difference between keeping hefty gains or giving them back to the market. The material you already learned in this episode will aid you in the learning process and will help you to interpret these potent signals. So stay with me and see you in the next episode.